Hello everyone, friends. In this video, I will share my trading plan for the S&P 500 index and the entire US market for 2026. I'll also go over the sequence of actions, how we'll identify the start of a correction, where to buy back in, and essentially what to do throughout the process. In 2026, the US market will go through both phases, growth and a significant correction. This is a natural cycle, especially after the strong growth in 2025. Which will once again give investors the opportunity to enter the market at more attractive prices, particularly if you are building portfolios. Provided, of course, that you exit your current positions in a timely manner. That's why our goal for this year is to determine the sequence of market cycles. In other words, to determine what will happen and when, to identify the key factors and signs of the start of a correction, as well as to outline the target zones of potential decline where, in fact, it may be possible to buy in. Those who are able to navigate this stage correctly and accomplish all the necessary tasks will have the opportunity to end the year in a phase of significant growth and strong profits. That is, to outperform the S&P 500 index, which is quite difficult to do. So, the current situation looks as follows. Throughout the entire 25th year, the market has been forming within the framework of the final wave 5, inside the larger third wave. This is the final stage before the start of a significant correction. Let me remind you that the last similar correction was in 2022, and in fact a correction of roughly the same magnitude is expected in 26. It is important to remember that the minimum target for Wave 5, which is currently developing, is to surpass the previous high. And this target was already reached quite some time ago. That is why this year we are considering a corrective movement as the base scenario, and the expected decline will be about 15 to 20% from Wave 3, meaning from its size, from the growth since 2023. We will take further actions solely based on confirmation of the structure. What does this mean? It means that we stay long exactly until a reversal into a correction is confirmed. And essentially after that, we look for places where it makes sense to pick up stocks, the index, and build our portfolio. To determine the start of the correction in time, it is necessary to monitor the lower level structure. In fact, the chart is in front of you. This is the hourly chart, and it is on this time frame that the market will give the first signal of a phase change. Without delving into wave markings, you can see on this chart that, for now, the price is forming within reversal forks, but at the same time, the upward trend is slowing down. In other words, the trend line is being tested, which is usually characteristic of weak movements and possible imminent reversals. And the current state of the market suggests several possible scenarios for development, which in fact we will analyze together in this video. The first scenario, friends, is an ending diagonal. And unfortunately, the current growth shows not only a slowdown in momentum, but also a clear narrowing. The wave structure of the movement also points to this. That is, each of the upward moves that have formed since the end of November 2025 has been forming in threes. The key confirmation point, the start of a correction and the completion of the ending diagonal will be considered as the initial breakout from the pitchforks, which is at the 6,800 level, and then a break below the 61.8% retracement of the rise, which is at 6,700. Once these conditions are met, we will officially consider the start of the corrective movement as having begun. The second scenario, friends, tells us about the possible continuation of the upward trend. And it's important to remember that a diagonal can be not only an ending one, but also a leading one. If there is a series of initial impulses in the market, then this means the beginning of the development of Wave 3. The key difference from the previous scenario is the depth of the current correction, which will appear in the near future. Here we expect a small corrective pattern, either a three-wave move or a sideways range, and after that the growth will continue. In this scenario, special attention should be paid to the subsequent target levels, which I have shown for you on the chart. This is the final signal line of our reversal forks, and the targets are 7,350 and 7,400 in the long term. Accordingly, friends, sooner or later a correction will begin. In other words, one way or another, this cycle will come to an end and we will see a significant correction. And one of the most effective ways to assess a correction in the US market is the classic use of moving averages with values of 100 and 200. Adding these moving averages to a higher time frame, in this case you see the weekly chart, allows you to anticipate in advance the price range to which the market is most likely to correct. It is precisely this range that should be used as a zone for searching for entry points and gradually building your investment portfolio in the medium term. This approach allows you to work calmly, systematically, and without the need to catch the bottom, extremes, and so on. Friends, these conclusions are enough to build a full-fledged trading strategy for the entire year of 2026. There is no need to rush or look for trades prematurely. It is much more important to focus on what the market is actually showing in reality. That is what I have presented regarding the level and dynamics within the pitchforks and within the wave structure. I will be publishing those subsequent updates, taking into account new information and new market movements in the Telegram channel. So if you need this information and you haven't subscribed yet, be sure to follow the link below this video, subscribe to the Telegram channel, and use the information to your advantage. This was Dmitry Abramenko with you. Thank you and have a successful trading year.